Hi guys, task 10.8, another task on the FIFO inventory system, just a little bit more complex than task 10.7. Okay, so here we're doing the calculations for Ula Limited dealing in electronic goods. They use the FIFO method of stock valuation. We have been given opening stock in this question on 1st January, 200 units at 640, and does include the cost of carriage. Now this question also includes carriage. Carriage must be included in all our calculations. Selling price per unit is 1,000 units. Then we've got the sales for each month. And in March, there was some reduction on the sales. Then we've got our purchases for each month. And no units were lost or stolen during the period. Okay, so in 10.8.1, we have to calculate the sales for the period January to March. So in January, okay, the number of units sold, first, okay, 400 units. In February, we sold 350 units. In March, we sold 450 units. But in March, there's a bit of a difference. It said during March, 20 units were sold at a reduced price. So we're going to do a separate calculation. So that leaves us with 430 units which were sold at the normal price. Okay, the next thing we need is the selling price. So in January, the selling price was 1,000 Rand. Also in February, in March, 430 units were sold at 1,000, but 20 units were sold at a 10% discount. So that means they were sold at 900 Rand. Okay, now we're just going to work out the totals, right? So 400 times 1,000, 350 times 1,000, 430 times 1,000, and 20 times 900. Okay, I'm going to just total this up here. Okay, and then we're going to add up these three figures to get our sales answer here at the bottom. Okay, so we've got sales, 1,198,000. Then in B, we need to calculate the value of the closing stock using the FIFO method. Okay, now before we calculate the value of the closing stock, we need the units of the closing stock. Now in task 10.7, remember the briefcases on here and at the end of here, the quantity was given to us. In this question and in many others, it's not given to you and you need to calculate it. Now, no matter what inventory system you're using, so that's specific identification, FIFO, or weighted average, we would use the same sort of calculation. So we start with opening stock, we add on purchases, we subtract returns, we subtract anything else that could have happened, like if stock was stolen, etc. And then we subtract sales, and that will give us the quantity of closing stock. So we're going to start with that, the number of units in closing stock. Now remember, you need to work in quantities, not in Rand values for this. So in this question, we have opening stock, we have purchases, and we have sales. Carriage on purchases does not affect this calculation at all. You must remember that. Okay, so the quantity of opening stock, 200 units. The reason is carriage on purchases does not change the quantity. Okay, we're going to add on purchases. So in total, 1,370. And the way we got this was that in January 520 purchased, February 570, and March 280. Okay, it says no units were lost or stolen, so we don't have to subtract that. Okay, sales you'll always subtract. Okay, so you must always remember to subtract the number that was sold. So we're going to subtract 1,200 units, and that's the total of the January, February, and March sales: 450, 350, and 450. This gives us an answer of 370 units. So you would do this calculation regardless of which inventory system we're using. Okay, 370 units, right? So the total units on hand is 370. Okay, then we're going to evaluate according to the FIFO method. So we're going to value 370 units. Now with FIFO, we look at the purchases list or the purchases schedule that has been given to you. We've got January, February, and March. We start from the bottom. So we start from March. Okay, in March, how many units were purchased? 280. Okay, so we're going to use the full 280 because remember, our closing stock is 370 units. So that means that the full quantity of 280 which was bought in the month of March hasn't been sold yet and is therefore part of the closing stock. Now the value you multiply by is the 620 Rand per unit plus the carriage of 25 Rand per unit. Okay, so in some questions you can calculate the carriage separately, but here it's easy enough to do together, so we're just going to do that. So instead of 620, we will just say 620 plus 25, which gives us 645. Okay, that will give us our answer of 180,600. Okay, now the stock on hand is 370 units. We got 280 from March. We still need a further, I think, about 90 units. 90 units, yes, right? So we're going to look at the month before March, which is February. And we're going to take the 90 units from there. So that means that in February, 570 units were purchased. Out of those units purchased, 90 units were not sold. So we're going to value 90 at 700. Now 700 is the cost price, 680 plus 20 Rand per unit, right? So 90 times 700, and that will give us our answer of 63,000. We're just going to add up the two answers now, and that will be the value of the closing stock. So 243,600, which we're going to use in our calculations moving ahead. Okay, then C, we have to calculate the cost of sales. Okay, so here's our calculation. Opening stock, purchases, carriage, closing stock, and cost of sales. Now in this question here, you can either split up the purchases and the carriage on purchases like I've done, or you can show it together, which is obviously easier. I just wanted to show you guys how it would be to split it up, right? So opening stock, it was 200 units at 640 Rand. Remember the 640 included carriage already, so you don't have to add on the carriage, which is fine, right? Then the purchases. Now I'm going to do a calculation, okay, of purchases basically without the carriage. So we're going to calculate purchases, okay, excluding carriage. Okay, so that's January 520 times 660. That's 520. Sorry. I'm first going to calculate purchases including carriage, right? So in January it was 520 times 680. In February 570 times 700, and in March 280 times 645. Okay. And that would give us an answer of 933,200. So that means it includes carriage. We could use 933,200 for purchases and just leave out the carriage. Alternatively, what you could do is work out the carriage itself. So the carriage in January is 520 times 20 Rand. In February, 570 times 20 Rand. And in March, 280 times 25 Rand. We'd add all of that up and work out the carriage. So now if I want to show purchases, I would take my answer 933,200, which I calculated on the side, and subtract the carriage amount of 28,800. But this is a lot of unnecessary work when we could have just used the 933,200 as our final answer. Anyway, this gives us 904,400. Now if you add up purchases and carriage on purchases, you will get 933,200. So instead of splitting it up like this, you could just have one line with the total and you would get the full marks for it. Closing stock, we just calculated it above, but remember that when you're putting it in, you must put it in brackets. Okay? And then you would calculate your cost of sales, which is just everything above. D, we're calculating the gross profit, okay, which is sales minus cost of sales. Sales is 1,198,000 from A's answer, and cost of sales is from C's answer. You must put a minus sign in front of it, or a bracket, and that will give you your gross profit of 380,400. Okay, then in 10.8.2, okay, we have to do ledger accounts. Okay, so we're doing ledger accounts for the trading account under the periodic inventory system and under the perpetual inventory system. Now, the perpetual inventory system is not as important as the periodic, but I just want to do this one exercise to show you guys how we would calculate it. Okay, so the first one we're going to do is the periodic inventory system, which is much easier as most of our figures have already been given to us. Okay, you must learn the format of this. Okay, so we're going to have January the 1st and then 31st March, which is the end of the period, will be our dates on either side. When we start with opening stock, we add on purchases, we add on carriage on purchases, customs duty, etc. On the credit side, we have sales and closing stock. All our folios are GJ, and we close this account after the profit and loss account, which is the gross profit. Okay, so the figures we've been working with them already. Opening stock 128,000. Purchases, again you could split it up 904,400 and 28,800, or else 933,200, the way I explained earlier. From sales, our answer from A, 1,198,000. Closing stock, which we calculated in B. Okay, and then you would just balance out your account. The credit side is obviously bigger, so you're going to put your answer in on both sides. Subtract and work out your answer, and this is the gross profit. So that's under the periodic system. Under the perpetual system, there's much less going on in the trading account. However, the calculations are a bit more complex. Okay, so we're going to have the date on either side, 31st March. On the credit side, you will have sales. On the debit side, you will have cost of sales. Okay, now this cost of sales needs to be calculated. Okay, whereas the sales figure is just the same amount that we had. Now, cost of sales, the way we calculate cost of sales under the perpetual system is more complex compared to the periodic system. So I'm going to show you this calculation on the side, but remember what I told you guys is that you don't have to learn the perpetual system for this section, but I will just show it to you for this one. Okay, so firstly, here's my calculation on the side. Okay, let's just ignore this for now. Okay, so in January, we had sales of 400 units. In February, 350 units. And in March, 450 units. We need to calculate cost of sales. Now, you know that in January, the items were purchased for 660 plus 20, which is 680 Rand per unit. However, first in, first out means that goods which were bought first were sold first. So when they sold goods in January, they had to sell the old stock first. So they had to sell last year's stock before they sell January's stock. Okay, so the opening stock was 200 units. So out of this 400, we're going to use the value for 200 units, we're going to use the opening stock. And for the other 200 units, we'll take it from January's purchases. Okay? So that means that 200 units will be valued at the opening stock of 640. Okay, and that gives us an answer of 128,000. Then the other 200 units will be valued at 680. And that gives us an answer of 136,000. Then we're going to add up. Our two answers, and that will give us the cost of sales for January at 264,000. The next month we go into is February. 350 units were sold. But remember, the opening stock is now finished in January sales. But January purchases, there's still some stock left there. So we need to sell that first before we sell February stock. Okay, so in January, 520 units were purchased. 200 were sold in the month of January. That means we are left with 320 units from January. And the remaining 30 units will be taken from February's purchases. Okay, so 320 units. 320 units, okay, from February's purchases. And in February, our price was 700 Rand. Okay, so calculation, there will be 320 times 700, which is 217,600. Then we're going to have 30 units. 320 times, not 700. Sorry, in January it was 660 plus 20. So 320 units at 680. Okay, which is 217,600, and 30 units at 700, which is 21,000. Okay, we're just going to add up the two answers again that I have in red. Okay, then in March, 450 units were sold. Okay, now again, there were some units left from February which need to be sold first before the March units can be sold. Okay, so now we're going to take all 450 units from February as they sold 540 units left from February. Okay, so we're going to take all 450 units at February's price of 700 Rand, which gives us 315,000. Okay, then we have cost of sales of 817,600. Okay, so we're going to put the cost of sales in here, 817,600. Do you notice that it's the same answer that we had for cost of sales in our calculations here? Okay, but obviously there's a very roundabout way of doing it, which is why you should be grateful that you don't have to worry about this system in your questions, right? Okay, now all we need to do is work out the total on either side and then work out the gross profit. Okay, and then that's all for this question. Thank you. Bye.